We are in the middle of one of the most interesting stock market related stories that I can remember in a really long time. And when I say we're in the middle of it, we are really in the middle of it. So I hope to do justice to what's gone on so far. And the way I'm describing this is a GameStop short squeeze that is potentially going to nuke some hedge funds. And let's just start at the beginning. Companies exist, and some of them are publicly traded, meaning you can buy shares in those companies. I know I'm going very, very basic here. One such company is GameStop. GameStop is a chain of stores where you can buy video games. And of course, with the advent of buying video games online and having them delivered digitally through, for example, Steam, a service that is available to download games. GameStop had been struggling for some time. Coronavirus then hit, which dramatically decreased the number of people that were doing in-person shopping, especially for something like video games when you can just get them on the internet already. So GameStop stock started to decline. And this led to a lot of people and subsequently hedge funds short selling the stock. Now, what does it mean to short sell a stock? Again, we're not going to do an hour on short selling, but the gist of it is as follows. The way most of us think about investing in stocks for what we might call the long term is that we are long on a stock, meaning you buy it at a certain price. The plan is to hold it. Hopefully, the price goes up, and then you sell the stock. If you buy at $50 a share, sell at $100 a share, you make $50 per share. But you can do essentially the reverse. You can short sell a stock. And what that means is you are placing a bet that the stock goes down rather than up. And instead of first doing the buying and then doing the selling, you are first selling borrowed stock, and then you are repurchasing it in the future. And with that same $50 and $100 number in reverse, you can make $50 per share. If there's a stock trading now at $100 per share that I believe in the future will trade at 50, I can borrow and sell shares for $100. When it drops to 50, I buy them for $50, and now I've made $50 per share. The risk is there's only so much a stock can go down. Zero, meaning if you invest $1,000, that could end up being worth zero, and you're out $1,000. When you short sell, there's really no limit to how much you can lose. You can borrow shares, and if they go from $1,000 to $2,000, you've lost $1,000. But if they go from $1,000 to $3,000, you've now lost $2,000. And as you can see, there's no limit to the amount that you can lose. Indeed, what took place is that a bunch of different hedge funds and big investors were certain of the demise of GameStop stock. They shorted it. And now this is where there start to be different opinions about exactly the sequence. But the long and short of it is that some online enclaves where stock trades are discussed, including a subreddit called WallStreetBets, pointed out, hey, look at this. There are a lot of shorts here that could potentially be squeezed. I am going to start buying and buying and buying this stock. That is exactly what tons of people did, and the price of the stock exploded, meaning that these hedge funds are now very upside down. Soon, many of these hedge funds are going to remember you're first selling and then buying when you short. They are going to have to buy, and they are going to have to buy at way more than they sold, putting them underwater, and in fact, putting some hedge funds, as far as we are being told, at risk of insolvency, at risk of going out of business. A few interesting takes on this. Congresswoman Alexandria Ocasio-Cortez tweeted, "Gotta admit, it's really something to see Wall Streeters with a long history of treating our economy as a casino complain about a message board of posters also treating the market as a casino." Our friend Anna Kasparian from the Young Turks tweeting, So market manipulation by Federal Reserve pumping money into failing banks and corporations is okay. But Reddit users rallying GameStop is wrong and must be regulated. The entire stock market is disconnected from reality. Funny how quickly the financial press cries for hedge funds. So here's my take on this. This run up of the stock price of GameStop is no more wrong than the other types of speculation, including the shorting that others do. Just because it's being organized on Reddit instead of by hedge funds high up in skyscrapers in New York City doesn't make it any more right or wrong. What this does expose, again, in case you forgot, is that the stock market is not the economy. And so much like when we say, oh, stocks are up, but it's hedge funds making money, that's not really the economy. The posters on Reddit that are doing this now making a bunch of money, it's also not the economy. It just reminds us the stock market is not the economy. Now, these hedge funds made risky deals. And if the stock price kept declining, they would have made a bunch of money. It went up, so now they're at risk of losing money. There are now a bunch of hedge funds that are saying this isn't okay and we need this shouldn't be allowed to happen. Well, hold on a second. If you want to do risky things, it's risk reward. The possibility of a big reward comes with risk. You can't now say you want the big reward, but you want the risk taken off the table by the government. They are saying it, but it is extraordinarily hypocritical. Now, there's a really important aspect to this, which is that many of the commentaries, the hot takes are people debating whether the WallStreetBets posters who are running up the price of the stock are sincerely buying GameStop stock because they believe it's a good company with good prospects, or whether they are ironically buying GameStop stock or cynically buying the stock. That doesn't matter. That could not be less relevant. That's what hedge funds do. Do you think that hedge funds and other investors are saying, we only buy long or short sell a stock based on our sincerely held deep down beliefs about the ethics and business prospects and management of the company? No, they're making speculative bets either way. And the idea about, oh, these aren't genuine pumpers, what difference does it make? That's the whole point of many of the people who have been saying the behavior by the hedge funds is predatory and cynical. Now they are saying, well, no. The WallStreetBets people are the cynical ones. Who thought to apply that to when Kelly Loeffler, former senator from Georgia, made those stock moves once she was briefed about what was happening and what was incoming with the pandemic? Was she saying, ooh, I don't think the management of these companies. No, she predicted that there were going to be general shocks to the system that would make these shares be worth less. And so she decided to sell. It wasn't she thought it was a good company or she thought the management team over the long. She just got out in order to avoid losing money. And by the way, what's a stock buyback at its core? When a company buys back its own stock, the point is to pump the price back up. It is not, well, we feel so confident in our business model that we are going to invest in our own. Come on. It would be cynical to think that's what's going on. So there's a case here to be made for transaction taxes, which eliminates this issue of are they genuine or cynical stock trades? And why would you expect anything else when this is the way that the stock market operates? There's two sides to it. And I am as curious as everybody else to see what happens with this. If one of your goals for the new year is cutting back on carbs or sugar, check out our sponsor, Monk Pack. Monk Pack Keto Nut and Seed Bars are delicious sweet snacks with less than 1 gram of sugar, only 2 to 3 grams of net carbs, and just about 150 calories. Perfect for a keto or low carb diet, or just about anyone who wants to eat better by cutting back on sugar. I love the Monk Pack Keto Nut and Seed Bars because they're really just a perfect balance of sweet and salty, soft and chewy with a nice crunch from the nuts and seeds. Flavors include sea salt dark chocolate, pecan almond, and peanut butter dark chocolate, my personal favorite. And they'll give you all of your money back if you don't love it. Go shop for Monk Pack Keto Nut and Seed Bars at monkpack.com. The link is down below, and they'll give you 20% off when you use the coupon code PAKMAN.